Breaking news, we had a bunch of earnings. Some of them, guys, are pretty good. Tesla's up a little bit. QRVO, everyone who watches the show owns a stock, at least I hope. It's up big in the aftermarket, but let's face it, big misses and a whole lot of damage. Green Mountain getting crushed. Whole Foods getting crushed. This has been one of the most unforgiving earnings periods I've seen in a long time. The slightest miss, and it's greeted with gigantic sell-offs. But the question now, is it creating buying opportunities, or is this really sending a message about the overall market? Hillary, what do you think about it all?
Well, it really depends on the individual stock. Now, Green Mountain, GMCR, I actually think this might be a buying opportunity because Green Mountain is about ready to roll out with Coca-Cola next week a big announcement about their cold beverage.
The market knows that, and they're crushing the stock right now.
I know, but I think maybe there was some sense that this would happen with earnings, but then, you know, that's why they scheduled it just this way. So there'll be an analyst day with this big announcement.
Plus, the rollout of their 2.0 was very bad. They thought the rollout would hit, and they're saying, well, next quarter we're going to get it. Anytime a CEO says, well, rolled out a little bit slow, it's going to take down a stock.
Yeah, I mean, it's one of the stocks that Wall Street really likes to short right now. I'm not sure what the short position is. I bet you it's double digit. I wouldn't be surprised anywhere between 20 or 30%. Everyone hates it, and there's no doubt about it. It's one of these companies that may be a victim of its own success.
Right.
But what I'm asking, though, is when you miss, companies are missing. Some companies are beating. Why are they taking them out to the woodshed? Is that a signal for viewers of this show that maybe the overall market is just toppy at this point, and this is a preview of things to come?
Right, and the answer is yes. A lot of the hedge funds, many of the big institutions, they're all very jittery. There's a fragileness to the market, and we've seen it over the last 2 days. And you have companies like Skull Candy, you know, today down 27%. You have Good News and Taylor's in talks. I mean, I know that's not based on earnings, and suddenly after hours up 12%. You have companies like Noodles, NDLS. It was a darling, and then crushed it. So,
well, it had a hot IPO. But it's missed a lot, though.
The answer is we're very trigger happy now, and we're really fast to exit.
I think to your point, the market is priced to perfection right now. So even Whole Foods, which put up good earnings, okay, the fact that they missed on the revenue line, the market they're taking them down. And I still think that people always talk about Whole Foods facing tough competition. In my neighborhood, they're beating the competition. So I really like what they're doing. But any miss, it is priced to perfection.
You live in a rich neighborhood. Let me switch. Scotty, I want to ask you this, because what I've seen in the last 6 months are these places where wealthier people shop. Whether it's a Whole Foods, whether it's a Williams-Sonoma, they have been missing. I mean, I don't know if rich people have just parked the money again, or that not enough middle-income people are saying, hey, I feel comfortable enough to buy something I really can't afford.
Well, it's because you have traditional grocery stores are starting to go after these type of shoppers. They're opening up their organic vegetables within their own little Krogers, or they're actually having homemade ice cream, homemade peanut butter. But a great thing that Whole Foods did announce today that they're opening up a new store concept targeted just for millennials to be opened up next year. They didn't go into many more details.
The way this
but I love that they're going to
and by the way, to Matt's point earlier, that's why they're trading down. Like, if you have to come up with a new gimmick, you're going to trade down on that.
Same store sales were just 3.6%. The street was looking for 5.2%. So even that, I think that's what killed them, because to your point, it wasn't a big miss. They matched the earnings. Slight miss on the top line. The guidance was lower.
Yeah, the guidance was lower. Average basket size was less than 3%. Typically, a bit better. Transaction count less than 1% growth. So if you break down the numbers and actually look at it, they weren't that great. The headline reads, you know, earnings per share best ever. Yeah, it was the best ever as far as earnings. But really, underneath the hood, they're in trouble. And the millennial thing, I think, is a complete gimmick.
Can I ask a question that we sit there and talk about? Maybe it's because people realize by the time they go to Whole Foods, they can go out to eat for that same amount of cost it costs to fill up their basket. And maybe that's what folks are starting to realize.
The broader picture is when you have a market that is either fairly valued or above its long-term value, with interest rates going up and liquidity coming out of the system, you can't afford to miss earnings.
So what does someone do, guys, then, if you own Whole Foods? I have subscribers in it. We're going to probably hold on to it. I think it will rebound. But the people have some tough decisions to make almost every single day after these companies report.
I think if you miss on both top line or bottom line, one of them, and something's wrong with earnings and a stock falls, you may want to get out of it or not jump into it. But there's a lot of companies that actually have good numbers and fall on that. I think that's a buying opportunity.
Yeah, I think the guidance, the forward guidance for the rest of the year, if that's really subpar, then that's your answer, right? If you want to hold a loser for the rest of the year. Hey, coming